You know, when this story first aired with Mallory, you had to scratch your head. What is the state doing? Well, homeowners who have felt that they have been shortchanged over the refunds for their property tax credits, they could be getting refunds now if new legislation goes their way. Today there was a hearing on that bill, and WMAR2 News' Mallory Safasti was right there. She has more on the taxpayers impacted and how the refunds would work, because if it matters to you, it's a matter for Mallory.
These are homeowners with low to moderate incomes. This credit was supposed to give them a break. Instead, they were cheated of hundreds or thousands of dollars, an error lawmakers are now looking to correct. Lewis Willen first spotted the miscalculation in 2016. Homeowners who received the homeowner's tax credit, but not the full amount. Other tax credits had been deducted first, reducing the incentive. After several years of sounding the alarm, the Office of Legislative Audits came to the same conclusion.
I really think it would be hard to find a more clear case of a state agency that's unwilling to admit an error that resulted in measurable damages that were invisible to low and moderate income taxpayers.
To right this wrong, Delegate Al Carr and 18 others introduced House Bill 158, assigning the State Department of Assessments and Taxation with the task of finding the homeowners who were impacted.
It has all the information about who has applied for the homeowner's tax credit in the past, so they are able to track those people, identify those people, and recalculate their credits so that people can get what they are owed.
Refunds would go back 3 years, and the state would space out payments over 6 years.
And we think that this is a great way to move forward, and it also properly holds the state accountable for errors made by SDAT and make sure that they're going back those 3 years.
SDAT issued a letter to the Ways and Means Committee asking for a technical amendment and writing, quote, "The department would be able to administer this legislation so long as the homeowner is presently living in the same property as they were from 2017 to 2019. It is unclear how the department would address payments to previous homeowners who have since moved and possibly cannot be located." And while they're working to determine a more accurate fiscal impact, the state expenditures would increase by $9 to $12 million. The bill will need to make it out of committee in order to move forward, and it's still unclear if implemented when homeowners can expect to see refunds.
All right, if you have a matter for Mallory, she wants to hear from you. You can email her at mallory@wmar.com, or you can find her on Facebook and Twitter.